Welcome to the Riskwiser Zone, the podcast where we dive into the latest developments in the world of finance and help you navigate the ever-changing landscape of risk and opportunity. I'm your host, Louis, and I'm excited to share today's stories with you. We're starting off with a look at the global economy, where trade tensions and uncertainty are continuing to impact supply chains and potentially lead to disruptions in the market. According to a recent report from the Bank for International Settlements, or BEIS, the growth outlook for the global economy has been impacted by tariffs, with global GDP expected to come in at 2.7% in 2025, and only slightly higher in 2026. The BEIS is also warning about the risks of unmoored inflation expectations, which could have a huge and persistent shock on the economy. This is based on a survey of households in 29 advanced and emerging market economies, where respondents expect inflation to be around 8% over the next 12 months. The report notes that once inflation expectations become unanchored, it can be difficult to bring them back under control. Meanwhile, in other news, France's finance minister has announced that the country is planning to introduce a digital services tax, which has sparked a heated debate about the role of technology companies in the global economy. And in the world of real estate, the Competition Bureau is warning Canadian landlords and property managers about the dangers of illegal discussions on rents. We'll be taking a closer look at these stories and more throughout the show, so stay tuned for in-depth analysis and expert insights. We'll also be exploring the latest developments in the world of stocks and finance, from the impact of trade tensions on global markets to the growing role of non-financial banking institutions in the financial system. The BEIS report highlights the need for regulators and policymakers to stay vigilant and adapt to the changing landscape of risk and opportunity. As we navigate these complex issues, it's essential to consider multiple perspectives and stay informed about the latest developments. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're diving into the world of economics and trade today, and I'm excited to share this next story with you. As we explore the complexities of global markets, it's essential to stay informed about the factors that shape our financial landscape. Now, let's take a closer look at the impact of tariffs on international trade. The recent announcements by the U.S. administration have sent ripples across the globe, affecting not just the American economy, but also its trading partners. According to a report by the Bank for International Settlements, the ongoing trade tensions could lead to a decline in global economic growth. A survey conducted by MIOB reveals that 17% of small and mid-sized businesses in Australia have already felt the effects of the U.S. tariffs. These businesses are concerned about the potential destabilization of the global economy, increased costs, and rising inflation. It's clear that the consequences of these trade policies are far-reaching and can have a significant impact on local economies. On the other hand, some argue that these tariffs are necessary to protect domestic industries and create jobs. However, others contend that they can lead to retaliatory measures, ultimately harming consumers and businesses alike. It's also worth noting that the Australian government has reported a better-than-expected budget bottom line, with a deficit of $5.5 billion in the financial year to the end of May. This is largely due to higher-than-expected company and personal income tax collections. However, the states and territories are experiencing a different story, with gross debt expected to reach $900 billion by 2029, a 238% increase. As we navigate these complex economic issues, it's crucial to consider multiple perspectives and stay up to date on the latest developments. The Riskwiser Zone is committed to providing you with balanced and unbiased information, helping you make informed decisions in an ever-changing world. Stay tuned for our final story of the day, right here on the Riskwiser Zone. Welcome back to the Riskwiser Zone. As we wrap up today's show, I'd like to shift our focus to some insightful commentaries from Macquarie Asset Management. We have two fascinating pieces to discuss: the Macquarie Global Bond Fund, May 2025 commentary, and the Macquarie Growth and Income Fund 2025 commentary. Let's start with the Macquarie Global Bond Fund. The key takeaway here is that U.S. economic growth slowed in the first quarter of 2025, largely due to policy uncertainty, cautious consumer and business sentiment, and restrictive Fed policy. Despite this slowdown, fiscal stimulus remains a supportive factor. In response to these conditions, the fund's managers have adopted a defensive positioning with a focus on higher interest rate duration and low credit exposure. Now, I know some of our listeners might be thinking, don't panic. And that's right, it's essential to maintain a level head in times like these. The Macquarie Global Bond Fund's approach is a great example of this. By being cautious and selective, they're navigating the volatile bond market with care. Moving on to the Macquarie Growth and Income Fund, we see a different story unfolding. This fund outperformed its benchmark in Q1 2025, thanks to strong healthcare sector allocation and stock selection. The fund's managers attribute this success to holdings like CVS, Gilead, and McKesson. On the other hand, financials, particularly Evercore, detracted from performance. As I always say, the more things change, the more they stay the same. In this case, the market volatility we're seeing is nothing new. It's a reminder that active management can be a powerful tool in navigating uncertain conditions. By being adaptable and opportunistic, investors can capitalize on the dispersion in company outcomes as firms respond to evolving policy and market conditions. As we close out today's show, I want to leave you with some food for thought. Whether you're invested in bonds or stocks, it's crucial to stay informed and be prepared for changing market conditions. Remember, a correction is when you lose money. A bear market is when I lose money. So, always keep a level head and a keen eye on the markets. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, invest with caution. Don't forget to tune in next week for more insightful discussions and expert analysis. Until then, stay wise and stay wealthy. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe. And until next time, keep your finances in check.